Moshe, mark us to market here on access to capital in the IG market, all the different parts of it, and tell us whether you're risk on or risk off at this moment.
We're in a good spot. So when you think about it, we've had $90 billion of supply in the IG market since Labor Day, and that cleared with a concession of low single digits, and it's trading well. That's an impressive outcome, not only in terms of the sheer size, but in terms of all the headlines that the market still had to digest when it was absorbing all that supply. So the question is what's driving it? And here's where Josh and I are the same, because it's the same narrative. It's the same no landing or soft landing narrative, and that's bringing in a wall of momentum-driven money into our market. So case in point, I would say hedge fund demand in IG primary is the strongest I've seen in my career. It is not uncommon for us to see order books where 50% of the orders are coming from fast money. And if you look back years ago, Vic, what was it, 0% for low beta? Maybe you get to 30 to 40% for higher beta, but nowhere near the magnitude that we're seeing right now. And so how are they doing that? They're betting on spread compression because that's the way you express that bullish call. And so they're buying high beta product. And of all the deals that we've seen over the last week and a half, some of the strongest books we saw were from triple B cyclicals. And that's not only fast money, that's real money. So that gives you some indication on how much the buy side is kind of leaning into the narrative. Aside from that, we continue to see sizable inflows from insurance companies and pension funds trying to capitalize on a 15-year high in rates. That's caused a very strong bid for duration. So again, if I look back at last week's supply, oversubscription levels on 30-year bonds were almost 2 times more than we saw on the front end of the curve. And on top of that, as Victor talked about, you have this great demand dynamic, and then you have this anemic supply phenomenon going on. We expect Q4 to be really light. So if you have a weak supply with a strong demand dynamic, dips are going to be bought in our market unless the narrative does a 180. And let's not forget that there are trillions of dollars on vacation in the money markets and bills right now that are going to need an investable home. So in my view, that translates into a higher floor and a higher ceiling for risk assets. But all in liquidity remains very sound in my market.
So you're risk on?
Yes.